Okay. So now let's start price action, guys. We are done with the Y data thing, and now we will be discussing the basics of price action. Like price action itself is a very vast topic, and it takes 2 days to like discuss all the like strategies based on price action and all the price action data reading point. But I'll discuss the initial basic things with price action, which will help you immensely. So let's start with this. Then we'll discuss about the risk management and psychology thing, especially the risk management part, which I'll show. So I'll share some strategies with you guys regarding that risk management thing. And third, we'll be discussing about the stop loss thing. How can you trail the stop loss? Because I have, in my experience, I have found that a lot of traders face difficulty in trailing that stop loss. Okay, so that is quite a I have a special method for that, which is called price action pivots based stop loss trailing, which I'll discuss with you at the last. And then I'll be taking the questions. Okay. So if you have any question or anything, you can ask in Q&A box. I'll be answering all the questions. Now, let's start this, which is price action. As always, we start with the definition. And usually people don't give importance to the definition of the price action actually. But whatever is there related to price action, the definition covers everything. Okay, the definition of price action is very interesting to read, which is the price action is a method of analysis of the basic movements of the price to generate signals of entry and exit in the trades. Okay, signals of entry and exit in the trades, and that stands out for its reliability and for not requiring the use of indicators. So by definition itself is price action does not indicates does not requires any indicator or anything. Okay, and then it generates signals of entry and exit. By using price action, you can decide entry as well as exit, and reliability is there. And what differentiates it from most forms of technical analysis is that its main focus is in the relation of its securities current prices to its past prices, as opposed to the values derived from the price history. Okay, so what does it means? Key price action usually correlate the what price that a particular stock or index is trading related to historical price of that particular stock or index, and how that stock or index behaved at that price point. Okay, the name itself contains price, and as you can know, price is the most bhav bhagwan che, hai na? Price is God, and price is the most accurate indicator. Hai na? If price is increasing, that means the stock is bullish. Price is decreasing, that stock is bearish. And whatever the price is acting at a different level, how the price is behaving at different level, and how the candles are forming because of that, and what is the movement of that stock or index along with that levels, that is the study of that thing is called price action. Okay, and then comes VSA. What does VSA? VSA means VSA is the volume spread analysis, which analyzes candles and volume per candle to determine price direction by figuring out demand and supply. Okay, as we were discussing in the previous session also, ki volume, basically the trading or the movement of price, they are usually decided by the relationship of demand and supply. When demand is more than supply, price will increase. If supply increases more than demand, then prices will decrease. And if you add if demand is, let's say, so much more than supply, that means ki aggressive buying will be there. So the volume will increase. Volume is nothing but the number of transactions happening in a particular time period. So if a lot of transactions are happening in that particular time period, let's say in 5-minute time period, a lot of transactions are happening. Earlier, only 10K transaction was happening. Now we are getting 10 lakhs transactions are happening in this 5 minutes. That means the volume will be very high. So this is the relationship of volume. And if volume is very high and the price is increasing, that means the demand is more than supply. So all these things are indicated in the candlestick charts, which we will be seeing in a while. Now, VSA takes into account three key factors. First one is the quantity of a volume per candle. Okay. Obviously, what is the volume per candle present? The range spread with which is the high and low per candle. Okay. If we are talking about candlesticks here, so this is the range of that particular candle. And then third is the closing price. And its relation to the range spread. Now let's talk about candlesticks, which is what are the candlesticks? The candlestick shows price related information of trades happening in a particular time period. Okay. Let's say you are using 5-minute time period. That means that the candles are forming every 5 minutes and they are indicating all the information of that particular stock, how that behaved, like it went up, down, it reached up to that level, which level, and closed at what level. All the information of that 5-minute time frame will be available in that particular candle only. Okay, so this is the candlestick. This is the significance of that candlestick. It gives info on what happened to the price of the stock in that period. Add volume to it and get a clear picture. Okay, if you add volume to this particular candlestick, then you will get a clear picture about what is actually happening in the market. Okay, so that defines the price action plus VSA study. Now, this is a candle, and as we all know, this is a bullish candle. Why? Not because of its color, okay, but because of the presence of wick at the lower side. And what does it means and how the price behaved? We'll discuss it in a while. So this is a bearish candle because of wick. Now, let me discuss it. This particular candle, this started to form here. Okay. Let's say this is 90 rupees price and this is 100 rupees price. Okay. So this is the opening price. From here, price went up to this point at the close. Okay. Yahan se yahan tak it went up to close. But before going to that close, it went down first. Okay. So when this candle was forming initially, let's say this is a 5-minute candle. So when this particular candle was forming, it was forming like this. Okay. From the open, it went down like this. And then from here, it went upwards. Price went like, let's say this is 85 rupees level. So from 90, price went up to 85 and then again started to go up. Okay. And then when it goes up, this kind of wick will form. This is called wick. And then price went up and up and up, and it went up to 100 rupees. So this candle formed. Okay. And the color of this candle is green because the closing price is more than opening price. Okay. The candle formed towards upside. So this is one of the reason why everybody tells you that always wait for the candle formation to occur. Suppose if a price is going downside, and you think you are in a hurry and you'll think, yeah, it is a red candle forming, prices are going to go down. You will enter here, and what will happen? Immediately your SL will hit, okay? Because price will revert from here and go towards upside. So every strong candle, this is very strong candle. Why? Because price tried to go down. Okay, bears tried to take the prices downside, but then bulls came and they took the price towards upside. So here the bulls were dominating on the bears. So that's why this is a strong candle and strong bullish candle. Okay. Now at the same time, this is another candle where the price opened at this level, went up to this level, and again closed at this level. So this is a strong bearish candle. Okay. Now you may one thing is very clear. Never decide whether any candle is bullish or bearish based on just the color of that candle. Always see the wick, then only you will be able to identify that whether that candle is bullish or bearish. Okay. Just say even if this candle is looking like this also, even if there is wick towards upside, but that wick is very small and this wick is large, then it means it is a bullish candle. Okay. And similarly here also, if even if the wick is towards lower side, but that wick is very small, that means it is a bearish candle. Even if this candle is looking green, let's say any green candle is forming, still it has very large wick in the upside. So you should, like that candle usually is very inconclusive, but you should not think that as a maybe towards bearish side. Okay, the more indication will be towards bearish side, but you should not think that the candle color is only green only. So that candle is bullish. You should not think like that. And at the same time, if any candle color is red, then that means it is out and out bearish. That should not be in your mind. Now let's talk about wicks. What are wicks? Larger wicks shows that the price has moved a lot during the duration of candle, but it got rejected. Okay? Large wick means it went down and down and down, and there the rejection came and it went upwards. This shows the presence of supply or demand. Lower wick act as a support and the upper wick act as a resistance. Okay. So if any candle is forming wick towards the lower side like this, so that particular level will act as a support. Similarly, the upper wick that will act as a resistance. And pin bars form because of operators manipulation, also known as stop hunting. So these both candles are pin bars. Okay, this is a very important candle. This pin bar is very, very important candle, and it holds a very special place in the price action analysis. So this pin bar, whenever it forms, it is usually because of operators manipulation, and this is also known as stop hunting. Okay, we'll discuss about it later on. Now let's discuss about the bullish pin bar. Quickly, let's go through it very quickly, which is it shows the very high strength of the wire, very strong signal that price may go up. It may be of any color, and it is used as a deceptive tool by operator. And this is very important, guys. The bullish pin bar can be of any color, and it is used as a deceptive tool by operator. Usually forms at the support, and when it is forming, you will think that price will go down and breakdown is happening. Okay, obviously I told you now, when bullish pin bar is forming, price goes down like this, and then again comes up, and then again price is taken up. So that is bullish pin bar formation. And you will short the stock, but the operator will come before candle closing and will do aggressive buying and take the prices above, hitting your SLs. Okay, यहाँ पे if you have shorted any stock, so you will be placing SL at this point. Obviously, when prices will go upside, your stop losses will get hit. The hitting of SL will cause the prices to go to much higher level. Okay, that is the significance. Like, obviously, if you have shorted this stock, and that means you have sold this stock, and your SL is a buy order. Now, if operator takes the prices to the higher level, that means your buy order will be hitting, and if buy orders are hitting, that means the prices will go much further. Okay, so that will add to the fuel, and that will increase the bullishness. Similarly, here also we have this candle with us, which is like it is bullish pin bar. And look at the significance of bullish pin bar formation. This is Earth Industry chart. Look at the formation of bullish pin bar. It is not that bullish, and this is also a strong candle, but that not that great. And so that's why, because price, whenever price touched this important level, like this is actually 900 level. So whenever price touched this, we got bounce from here. So a lot of pin bars were forming. If you were short in this particular stock, so you should have exited seeing this pin bar. Okay, and you can initiate long trade also based on this pin bar. Similarly here also, and look at the breakout. Okay, we'll discuss about breakout also in the webinar. So what is this webinar? Breakout. So breakout, we have a lot of resistances. This resistance is very strong because price has returned a lot of times from this level. So that's why this resistance level is strong. And when price breaks this resistance with a good strong candle, very good chances are that it will go to much higher levels. Okay. Now this setup, we have already seen this setup in the tweet, the thread which I shared with you this week. Let me discuss the setup once again. But like now you will be getting the significance of that setup. Okay. See, this is bullish pin bar, very strong candle, which is indicating towards up move. Now, if you add this to the setup, in this setup, what we say, a bullish pin bar forms at the beginning of day, initial 5 or 15 minute time frame, it's a very good signal that the stock will go up in the day. Okay, more chances are that the stock will go up and up only, and can enter with the stop loss as the low of the candle. Okay, so your SL will be sitting here, your entry will be here. If any bullish pin bar gets formed in the day, sorry, like this bullish form in the first 5 minutes of the day. Okay, so this is first 5 minutes. This is bullish pin bar formation. So you, if that candle forms, that means the price went down, but bears were not that aggressive. Bears could not take prices much further down. So then again, bulls came into action and they took the prices upwards. That's why this pin bar formed. A very good chances of that key this pin bar will get a follow through and the prices will move towards upside. So you can enter here and your SL will be here. Okay, and you can use VWAP, moving average, and pivots for trailing the SL. Pivots we'll discuss later on, and can use charting scanner for this. You have to run that scanner at exactly 9:20, and then you can enter. Okay, now look at the example. Okay, this is one of those example, although not very like clear cut wick was there, although some kind of wick was there in the upside, but still this is a bullish pin bar. If you convert this to a 15-minute time frame, it will be like that. So if you enter here, your SL will be here, and you don't have to be very specific कि यार ऊपर एक wick होगा ही नहीं, है ना? There is a possibility a small wick should be there, but that wick should be smaller and larger wick should be there in the lower side. So you can enter here and you can keep on trailing your SL, and you can make maximum profits from this trade. Now let's discuss about the bearish pin bar. It is similar to bullish pin bar, but it is red in color usually, not always, and the closing of prices at this region. Okay, look at the significance of that bearish pin bar. I'm not going through detail, guys. You will get the PPT and you can read that. So here it is bearish pin bar formation. Here we are seeing bearish pin bar formation, and prices went down after that. And this is the same setup for bearish pin bar. Okay, if bearish pin bar forms at the beginning of the day in 5 or 15-minute time frame, it's a very good signal that the stock will go down in that day, and can enter with stop loss as the high of that candle. This is your stop loss. You can enter here, and price will go down. Use VWAP or moving average pivot for trailing SL. This is the only time I will be taking the names of these two indicators. Otherwise, I don't usually use any indicator much for price action. Similarly, you can use charting scanner. I have shared the scanner with everyone. Those who did not got that scanner, I'll be sharing that scanner in our Telegram channel itself. So it will be helpful for you. We have already discussed the like operators activities segment. Now let's discuss. Just give me a few minutes, guys. Okay, so here it is. Is my screen visible now, guys? No. Okay, okay. Mm, yeah, here it is. I think it will be visible now. Is it? Okay. Okay. Thank you, guys. Thank you so much for your input. Now let's discuss about direction of trend using these candles. Okay. Let's discuss about few topics, few small topics from price action. So this is the direction of trend. This is obviously bullish. You know, both the candles are forming low green and forming above each other. That means the price went up to this level, went down, and then again went up. This bullish direction. Similarly, this is bearish direction. Price came down, then again slightly went up, then again came down. But this direction, we are not sure of any direction here. Okay, look at this candle. Price went upwards, again went up to this level, again then went up to this level, and price went upwards up to this, then again closed this. Actually, price started from this level, then it went up to this level, then again went up to this level, again came down, again went up, again came down, and then closed like this. Okay, so out and out the diagram looks like this, and this is not a clear indication of any direction. Okay, always beware of this kind of scenarios where the direction is not clear, and you should not avoid taking any position in these situations. Okay, similarly here also we are not getting any direction. It went down and then again went down, then again went up, so it is not a clear direction. Always look for direction using two candles only. You can't decide of the direction using only one candle, except for the case of pin bar. If you are using pin bar na, then you can get an idea about the direction, because in pin bar itself is a very good candle which indicates toward the direction. But at the same time, for pin bar also you'll need a follow through. Like if any bullish candle is forming, like if any pin bar is bullish, so what should be there? After formation of bullish pin bar, there should be another candle which should form upwards to that level of closing of pin bar. Okay, if let's say that pin bar is closing at 100 rupees, that candle should start forming and should close above 100. It should go upwards. So that is follow through. Follow through is also a very important concept of price action. Now let's discuss about the concept of momentum in price action. When the range of current candlestick is more than the previous one, momentum is increasing. And when the range of current candlestick is lesser than the previous one, momentum is decreasing. The direction should be in unison. Okay. The momentum is decided by a range only. If particular candlestick is, if any candle is forming and the range of that particular candle is increasing. Let's say this candle had range of only 10 or 20 rupees. And this second candle that is forming, it is having a range of 30 rupees or 40 rupees. So that means that the momentum is increasing. Okay, it's not necessary that it should increase by a very huge margin, but it should increase. If that is there, that means the momentum is increasing. When the range of current candlestick is lesser than the previous one, momentum is decreasing. Direction should be in unison. Okay, direction should be either up or down. So here the momentum is increasing, but look at the example here. This is also momentum increasing. But if you look at this candle, so it means the momentum is not increasing here. Okay. This is look at the range of this particular candle. You will get to know this range of this candle was good, but range of this particular candle was not that good. So momentum was decreasing here. Similarly, here also momentum is decreasing. Although the price is going down, but momentum is decreasing. If momentum keeps decreasing, that means it is a problematic scenario. If momentum keeps increasing, then it's a very good scenario for us. If momentum is increasing, that means we can ride that trend. But if momentum is decreasing, that means we can't ride that trend. We should look for exit. We should keep trailing our SLs. Okay, we should trail our SLs very closely. Okay. So strength of the move using momentum. Decreasing momentum shows that the strength is decreasing and entry of opposite forces has occurred. And that's why, because buyers have entered the equation, that's why they are like stopping the fall of this particular stock or index. Now, when the momentum is fast, the larger trend will continue even after a slight pullback. If the momentum is fast, if consecutively bigger candles are continuously forming, that means the larger trend will continue even after slight pullback. A slight pullback may come, but the larger trend will continue. If the momentum is slow, high chances of reversing direction of bigger trend after the pullback. Okay, if the momentum is slow, there are very good chances that price can revert also after the pullback. Okay, pullbacks are important. Like pullbacks are present in any kind of trend. If any stock is let's say going up and up, then also pullbacks will be there. If any stock is going down and down, then also pullback will be there. None of the stock will go continuously up or continuously down. There will be presence of the pullbacks. You have to identify whether the pullbacks are these pullbacks which are present are strong or weak. Okay, then only you can decide about taking the trade in the direction of that trend or against it. And look at these three candles. Buyers are strong in all the three candles. But look at this candle. Okay, if the structure is looking like this, that means it is good. Okay, prices are going up and up only, and everything is good. But look at this structure. Price went up and up, then again came down. So sellers came in. This generally occurs in the resistance region. If price is standing at the resistance region, then it occurs. Okay, sellers came into this picture, and that's why this pin bar formed. Okay. So here it is. Look at this particular example. It is Hindustan. Look at the momentum, increasing the momentum. Okay, range were continuously increasing. It was going good, but then look at the range here, and look at the price structure formation after that, and look at this. So if you enter, let's say, obviously this 1900 was a good resistance. Price has returned from there once, but still, if price returns like if you are not able to enter in this particular candle itself, although it was a very good candle to enter. Okay, this pin bar was good. You can enter here also, keeping SL at this point. But still, if you don't enter at this point, so you can enter here, looking at the follow through and the increase in the momentum. Okay, look at the increase in the range and look how price behaved after that. Okay. And similarly, look at this candle also. There are few more learnings in this particular screenshot. So here you can see this particular candle. Look at this is a type of pin bar, and that too bullish one, and a bullish pin bar. But look at the next candle formation after this. This next candle was not that great. Instead, it was also a pin bar, but it is a bearish pin bar. So as I told you, always there should be a follow through always. If follow through is present, then only the trend will continue. If follow through is not there, then the trend will not continue. Okay. So in this case, the follow through was not there. So you should not enter in this trade. Okay. And here the breakout was there. Look at the continuous formation of good green candles. But we'll discuss about the breakout later on. So here it is. Look at the chart of Dixon here. Okay. First of all, focus at this point. If you want to enter in any trend, okay, if you want to ride any trend, so what is needed? Like if you want to enter in this trend and like ride this trend, so first of all, you will have to study what was happening previously. Okay, let's look at this candle. Look at these candles. Actually, price was going up, but not much strength was there in the candles. And look at this candle. Although accumulation was going on, accumulation or distribution was going on, and that got confirmed after formation of this candle. But look at the range of this candle. Okay, these candles, the range keep on decreasing. Not much strength was there, and also we had like iske baad it pullback came, and we had this pin bar formation here. And look at the volume of these candle afterwards. So a great volume was there for these candles. That means the momentum is building up, and you can ride this trend. And when the trend was going up, these pullbacks were there, but they were not able to close below this level. So these pullbacks were weak. We'll discuss about the pullback and the definition, all those things in the webinar, which I'm going to conduct in the month of August. You can go to my site to learn about that. So now from here, you can see, and the most important concept which we can learn in this example is this. Okay, look at this candle. The spread of this candle is not that great. Okay, if you look at this only, this is not that great, but look at the volumes. Volumes are very high. That means key what how this proceeded. This volume indicates a lot of transaction happened in that small time period. Okay, the time period of only 5 minutes. That a lot of transaction happened in that period. That's why the volume was that great. But all the transactions were not bullish only. Okay, some operators came into picture also, and they started selling Dixon. Okay, that's why price went upwards, and at the same time, sellers came into action, and they took the price immediately downside. Okay, like retailers will come into this picture, and they will start buying. Then again, seller like the operators will sell in huge quantity, and then the prices will go down. So that's why this kind of candle formation occurs, which is called climax candle actually, and this was formed here. Similarly, here also, look at these candles while increasing the momentum. Similarly, here also, these candles, the range was increasing while going down. Okay. So these are the examples of momentum. And when the momentum is increasing, that means the range is increasing, and trend can go up if the momentum is towards upside. If momentum is increasing toward downside, the trend may continue towards downside. Okay. So there are a lot of other things in price action, guys. We'll be discussing about like volume also, direction also, stop support and resistance based on the price action. A lot more things will be discussed in the webinar. So do join me there. I'll be discussing continuously 2 days regarding the price action and the basics, and then we'll be discussing about the Y data in next 2 days. I'll be showing you hundreds of examples for every concept. Now we'll go through the discussion on risk management psychology, which I left when we were discussing about the Y data thing. So here it is. Just give me 5 minutes, like 2 minute break, guys. Just 2 minute break. I have to take one call, please. Welcome back, guys. Thank you so much for waiting for me. Before starting the risk management part, let's answer few of your queries, if any. No, there is one question: does this Y data holds true for commodity options? We don't have that yet, although that currency data was present in iChart, that is also not available right now. So we don't have. Although there should be there, but how to differentiate Y buildup created by futures hedging and Y buildup created by options writing? We read both of them differently, because futures, as I told you, now the direction will be read by only options Y data, which will be useful. Charting scanner, I'll share that in the Telegram. Don't worry. Nifty weekly is having bearish pin bar. Yes, that is having a bearish pin bar. Actually, I'll discuss about that in a while. Okay. Before leaving this session, we'll discuss about Nifty and Bank Nifty. Although Nifty and Bank Nifty are something which are like that too big to decide by only a pin bar or any pattern formation. Okay, like whole world trades in Nifty and Bank Nifty, so everybody is there. A lot of hedge fund as well as big traders are trading Nifty and Bank Nifty. A lot of fight goes on. So only a candles pattern formation will not be enough. Will require a lot of things for that. So where is this? Sorry. And then we have assuming momentum is increasing and we have a bullish setup, should we trade in stock or an option? Option. Like the option of that particular stock. Okay, if you have bullish setup and momentum is increasing, definitely will go with option buying, because option buying will benefit immensely from momentum increase. Okay, if you want to make fortune out of your data reading skills or your direction predicting skill, you will have to use options. No doubt about that. Time frame for this, for HUL you showed daily. Does this work on shorter time frame? If so, how shorter time frame? It works on every time frame, like because price action is supreme, guys. And price action is something which is applicable on every instrument, which is like where trading is possible. Be it stock, be it in indices, be it bank nifty, anything. And price action will work there. Why? Because price action is based on the simple principle of demand and supply, or you can say fear and greed. So if demand and supply are there in any instrument, the price action will work there. Price action principles and the candles, they will work there. So every time frame this works. Daily time frame 15:45 minutes, 1 hour, even in 1 minute time frame also this works, especially at last 1.5 hour of expiry. What is the interval that one should keep tracking on the OI chain data on intraday basis, and on which app? OI chain data. See, OI data is available for us every 3 minutes from Nifty. Okay. The OI data is available at Nifty site or on NSE site also, but that data is in form of numbers. And these are the sites, the iCharts, Concept Sensible, all these sites provide us that data in a graphical format. Okay, so we get every 3 minutes we get new OI data, and which we have to read. There's one question which is how to catch reversal, especially on Thursday weekly expiry, apart from the pin bars. Pin bars are very for expiry, we need a lot of data reading. This I actually forgot to discuss this expiry thing when I was taking the OI data session. I'll discuss it in last. Okay. I'll discuss it in last. Just remind me once more how we do that in expiry. Now, RSI indicator, I don't use that. Usually, I don't use. Is it true that stock options have low liquidity and buying these options can be risky? Yeah, it is true. But then you will have to not entirely true, because for every stock, like obviously Nifty and Bank Nifty have a lot of liquidity because every trader is trading them. So they have liquidity in all the strikes. But for the stocks, only few strikes are liquid. Usually the ATM strike is liquid, and then the round numbers, they are liquid. Okay. If any stock is, let's say, trading at 835 rupees, and that has contacts at strikes at every 10 rupees interval. So we will be getting 840 will be there, 850 will be there. So obviously 850 strike, that will be liquid because that is a big round number. So operators will be there, the sellers will be available there, and sellers and buyers will be there. A lot of fight will go on there. Okay. But usually the 840 or 830, that won't be much liquid. So you have to decide it accordingly. Always go for a big round number during option buying, option buying in stock option. Yes, whenever, like there is one question which is, should we first analyze future data and then Y data, or vice versa? Always future data first, then Y data. If you are doing EOD, end of the day analysis, live market with future data is not required. Only Y data, options Y data will be enough for getting the direction. What parameters to look for creating the daily watch list? Yeah, that's a good question. I'll answer that in last, because it will require some showing of other charts also. How do I identify zero hero? That also I'll answer in the last. When I'll answer about that support resistance using white thing now, then I'll answer it. Okay. Now let's discuss about the risk management part. Then we'll discuss about that expiry thing, where 0 and all, how those kind of trades are created. And also I'll be discussing about the price action based pivots. So first of all, let's discuss about the risk management thing. Like for risk management now, what is this? Like sellers have a lot of tools for risk management. They have already inbuilt risk management thing that they will be able to sell only one lot, okay, with 1.5, or by if they go with hedging, so they will be requiring at least 60,000-70,000 capital to sell one lot. Okay. But at the same time, buyers require very less capital. So this is one of the most important reasons why buyers fill their account with a lot of options. Okay, whatever capital size they will be having, let's say they are having 50K or 1 lakh. So jitna bhi, whatever capital they are having, they will buy options worth of all of them. And this is the main problem with option buying, that am I audible, guys? Am I audible? Please let me know in comment box.